All right, so we're diving into options trading today. Got Wendy Kirkland's Option Trading in Your Spare Time right here, ready to break it down.
Awesome. Yeah.
Now, you mentioned wanting some extra help with the basics, and that's perfect because Wendy really lays a solid foundation. You know,
Yeah, she starts right at the beginning with the stock market itself.
it's like building a house. Got a good foundation.
Exactly.
So let's do a quick recap. Bull market, prices are up, everyone's feeling good, like, whew.
And then bear market, prices down, mood's a bit more like, uh-oh.
Yeah, but even in a bear market, there are ways to make money, right?
Definitely. Good traders know how to find those opportunities.
Okay, so within this market, we've got stocks, little pieces of companies.
Right, you're essentially a part owner.
And mutual funds, those are like baskets of stocks, pre-made for diversification.
Exactly. Less risky than putting all your eggs in one basket, as they say.
So where do options fit into all of this? This is what we're really here for.
Options are interesting. You're not buying the asset, but the right to buy or sell it later at a certain price.
Okay, so it's not the actual thing, but like a reservation.
Yeah, like you're reserving your spot, but you can decide later if you want to actually go through with it.
Wendy has this great example in the book about a house and toxic waste.
Oh, yeah. That one's a classic.
It's so vivid, it helps to make it really clear.
So imagine you have the option to buy this house for $100,000.
Okay.
You pay a small fee for the option.
Gotcha.
Now, if you find out there's like toxic waste under the house,
Yikes.
you can just walk away, only losing that small fee.
But if suddenly the neighborhood becomes the hot new place to be and the house is now worth $200,000.
Boom. You exercise your option, buy it for the original price, and then sell it for a huge profit.
That's incredible.
That's leverage, baby. Options can really amplify your gains.
So if you think the price is going up, you buy a call option. And if you think it's going down, you buy a put option.
You got it.
It's like betting on which way the arrow is going to point, up or down.
Exactly. And speaking of betting, Wendy gets into the psychology of trading.
Oh, yeah, that's a huge part of it, right?
Mindset is just as important as technical stuff.
It's so easy to get caught up in the emotions like, oh, no, it's going down, or I got to buy more, it's going up.
Exactly. Fear and greed, classic pitfalls. Wendy really hammers home the importance of having a plan, being disciplined.
Not just following your gut or some random tip you heard.
Right, doing your research and thinking long term.
So we've got the basics, bulls, bears, stocks, mutual funds, and the idea of options.
Yep, the foundation is laid.
Now, Wendy talks about three main types of assets for option trading.
Right, ETFs, indexes, and individual stocks.
Let's break those down. ETFs, what are those exactly? I always see those letters, but...
Think of them like bundles of stocks focused on a specific sector or industry.
Okay, so instead of picking one company, I could buy an ETF that tracks, say, the whole tech industry.
Exactly. Diversification, it's a beautiful thing. Wendy mentions XAU, which tracks gold and silver, and XLE for energy, for example.
Got it. So ETFs, less bumpy ride than individual stocks, potentially. What about indexes? How are those different?
Indexes crack a basket of stocks, like the S&P 500 or the NASDAQ 100. They give you a snapshot of the overall market.
So if I think the entire market's going to go up, I could buy a call option on the S&P 500.
You got it. Wendy talks about QQQQ for the NASDAQ 100 and DIA for the Dow Jones Industrial Average.
All right, so ETFs and indexes, check. Now, individual stocks, those are like the high-risk, high-reward option, right?
Exactly. You're betting on a single company's performance. Wendy suggests focusing on younger, faster-growing companies.
Makes sense, more room for growth. But how do we even find these promising stocks? There's so many out there.
That's where Wendy introduces Investors Business Daily, IBD.
Oh yeah, IBD, I've heard of that, but what is it, really?
Think of it like a treasure map for stocks. It ranks them based on tons of factors, earnings growth, relative strength, all that good stuff.
Wow, so it's like your personal stock research assistant.
Exactly. And Wendy provides specific criteria for filtering stocks through IBD.
Okay, I'm all ears. Give me those golden nuggets.
First up, price. Wendy suggests focusing on stocks over $25.
So we're not messing around with those penny stocks.
Not in this strategy. Price over $25 generally means a more established company.
Makes sense. Less risky. What's next?
Optionability. You got to make sure the stock has options available for trading.
Right, because no options trading.
Exactly. In IBD, you'll see a little O next to the stock if options are available.
Easy enough. What's the third criteria?
EPS rating. That stands for earnings per share, how much profit the company is making.
So we want high EPS, right?
Absolutely. Wendy suggests aiming for an EPS rating of 80 or higher.
Strong earnings. Good sign. What's the fourth thing we should look for?
Relative strength rating, RS rating.
Right.
It compares the stock's performance to the overall market.
So we want stocks that are outperforming the market, not lagging behind.
Exactly. Look for an RS rating of 90 or higher, according to Wendy.
Got it. So our 4 key filters: price over $25, optionability, EPS over 80, and RS over 90.
That's your IBD cheat sheet right there.
Awesome. Now, Wendy also mentions some additional factors to consider.
Yeah, she talks about checking the 52-week high, seeing how close the stock is to its peak performance.
So if it's near its high, maybe less room to grow.
That's one way to think about it.
What else?
She also talks about the accumulation distribution rating.
Oh yeah, that's about seeing whether institutional investors are buying or selling, right?
Exactly. It's like following the smart money.
If they're buying, good sign. If they're selling, maybe a warning flag.
Right. It's an extra piece of the puzzle.
Okay, so we've got our IBD filters plus some bonus clues.
All pointing us toward promising stocks.
Now, Wendy says all this info is great, but we need to see it visually through charts.
Charts. The language of the market.
Honestly, charts kind of scare me. All those lines and squiggles.
I know they can look intimidating, but they're just telling a story.
A story about the stock, right?
Exactly. Once you learn the language, you can read the story and see where it might be going next.
Okay, so what are some of the key elements of this chart language?
Well, you've got candlesticks, support and resistance levels, and then different types of charts like daily, weekly, monthly.
Okay, let's start with candlesticks. What are those?
Imagine them as little visual representations of the stock's price movement over a certain period.
So each candlestick is like a day in the life of the stock.
You got it. They show you the opening price, the closing price, the high and the low for that day.
Like a little battle between the bulls and the bears.
Exactly. And they come in different colors, usually green for up days, red for down days.
Easy enough.
Duh.
Now, support and resistance, those sound more like physics terms.
Well, think of support as a floor for the stock price.
And resistance is the ceiling.
Exactly. They're like battle lines where the bulls and bears fight it out.
This is starting to get interesting. So we have those candlesticks showing the daily action and then support and resistance marking those key levels.
Exactly.
And you mentioned different types of charts.
Right. Daily charts show you the short-term moves, while weekly and monthly charts give you a bigger picture.
Like zooming in and out on a map.
Perfect analogy. Wendy emphasizes the importance of looking at multiple time frames.
Okay, so we've got candlesticks, support, and resistance. Different time frames for our charts.
It's a lot, I know, but we're building up our chart reading skills step by step.
And next time, we're going to add those superpower tools you mentioned, the indicators.
Indicators, those are the real game changers. Can't wait to dive into those.
This is getting exciting. Stay tuned for the next part of our deep dive into options trading.
Welcome back. We were getting into those charts, remember? Those maps of a stock's journey.
Yeah, I'm starting to see how they tell a story.
And now it's time to add some really cool tools.
You mean those indicators? I'm ready to unlock some secrets.
They're like having X-ray vision for the market. Wendy spends a lot of time on these in the book, so let's break down a few of the important ones.
Okay, hit me with the first one. What's our starting point?
Let's start with a basic but powerful one, the simple moving average, or SMA. It's like a trend line that smooths out the daily ups and downs.
So instead of getting lost in all the little jumps and dips, we can see the overall direction.
Exactly. We calculate it by averaging the closing prices over a certain period, like 7 days, 20 days, or 50 days.
Okay, so those are like different lenses, right? Short-term, mid-term, long-term.
Right. And seeing those SMA lines on a chart helps us see if the stock is trending up, down, or just kind of going sideways.
So how do we actually use these SMAs to make decisions?
Great question. One classic signal is the crossover. When the shorter-term SMA, like the 7-day, crosses above the longer-term one, like the 50-day,
Ah, I see.
that's often a bullish signal suggesting the price is likely to go up.
So it's like the short-term momentum is winning the tug-of-war.
Exactly. And the opposite is true, too. If the short-term SMA dips below the long-term one, that can be bearish.
Okay, that makes sense. What else do we have in our toolbox?
Next up, the Relative Strength Index, or RSI. This one's all about momentum. How fast and strong is the price moving?
So a high RSI means the stock is running, and a low one means it's crawling.
Yeah, kind of like a speedometer. It's measured on a scale from 0 to 100. Above 70 is usually considered overbought, meaning the price has been rallying hard and might need a break.
It's getting tired.
Right. And below 30 is oversold, like it's been beaten down and might bounce back.
It's like that rubber band stretching too far, right?
Exactly.
Yeah.
The RSI helps us see those potential turning points.
Okay, SMAs and RSI. Got it. What's next? This is getting good.
Now, for one with a slightly scary name, the moving average convergence divergence, or MACD. Don't let the name scare you, though.
MACD. Okay, I'm ready.
It uses two moving averages and this thing called a histogram to show the relationship between them.
So it's like going deeper into the momentum story, beyond just the SMAs alone.
Exactly. Wendy really likes the MACD histogram because it often anticipates changes in trend.
So it's like a sneak peek into the future?
You could say that. The specifics can get a bit technical, but the main point is it helps us spot those buy and sell signals.
Okay, my brain is starting to feel full. How do we keep all these indicators straight?
Don't worry, it takes time and practice. Wendy emphasizes that no single indicator is perfect.
Right, it's not about finding the magic bullet.
Exactly. We're looking for agreement between multiple indicators.
So it's like having a team of experts, and we're looking for consensus before making a big decision.
I like that analogy. We're building a case for our trades. Now, besides the SMAs, RSI, and MACD, Wendy mentions a few others that are worth exploring.
Okay, bring on.
There's the percentage price oscillator, or PPO, which is kind of similar to the MACD but can be more sensitive in choppy markets. And then there's the Williams Presar, another momentum oscillator that can confirm those overbought or oversold signals.
So the PPO and Williams Presar, those were like adding more voices to our team of experts?
Exactly. And Wendy also talks about two that are super helpful for understanding trend strength.
Yeah.
The average directional index, or ADX, and the accumulation distribution line.
Trend strength, that's important, right? We want stocks that are moving, not just stuck in a rut.
You got it. The ADX measures how strong a trend is, whether it's up or down. A rising ADX means the trend is getting stronger.
So strong uptrend plus rising ADX, that's a good sign for a call option.
You're catching on. Now, the accumulation distribution line, that one tells us if those big institutional investors, the smart money, are buying or selling.
It's like we're spying on their moves.
Kind of. If they're accumulating, it could mean they're confident in the stock.
And if they're selling, maybe we should be cautious.
Right. They usually have more information than us, so it's good to see what they're doing.
Okay, this is all starting to connect. So we've got those charts with the candlesticks, support, and resistance. Then we add those indicators like SMAs, RSI, MACD, PPO, Williams Presar, ADX, and the accumulation distribution line.
Yeah, you got them all. It's a lot, but I'm starting to see how each piece adds to the puzzle.
It's like learning a new language, but once you get it, it's so powerful.
I'm feeling more confident already. So, charts, indicators, check. What's next? What other secrets are hidden in Wendy's book?
Well, now that we have those tools, we can start to see those cool chart patterns that Wendy talks about. You know, triangles, wedges, flags, all that good stuff.
Oh, yeah. I've seen those on charts, but I never knew what they meant.
They're like little clues that tell us what the stock might do next.
I'm ready to unlock those clues. Let's do it. Welcome back to our final deep dive into option trading in your spare time. We've covered so much.
Yeah, we've built up a whole arsenal of tools, haven't we? Charts, indicators.
It's been quite a journey. So before we wrap up, what are some of the key takeaways we should really remember as we move forward with our trading?
For me, one of the biggest is that emotional control, discipline.
It's so easy to get caught up in the excitement, right?
Yeah, you got to stay cool, stick to the plan.
Like Wendy says, it's like playing poker. Exactly. Can't let those emotions make you do something rash.
And knowing when to sell, that's huge, right?
Oh, absolutely. Selling is just as important as buying. Sometimes it's the best move you can make.
Wendy even has some specific guidelines to help with that.
Right, like the 7% rule. Remember that one?
Refresh my memory. What was that about again?
If a stock drops 7% after you buy a call option, it's time to cut your losses.
Okay. So it's like a built-in safety net.
Yeah, helps you avoid getting stuck in a losing trade.
Speaking of avoiding losses, Wendy's a big fan of paper trading.
Oh, yeah. That's essential, especially when you're starting out.
It's like practicing with training wheels before you get on the real bike.
Exactly. You can try out different strategies, see what works without risking any real money.
And she even shows you how to set up a virtual trading account.
Yeah, with Options Express. That's a great platform.
So even if you're not quite ready to jump into live trading, you can still get that experience.
Definitely. It's invaluable for building confidence and getting comfortable with the whole process.
You know, one thing that really stood out to me was her discussion of professional traders. The toots, as she calls them.
Ah, yes, the big players, those institutional investors.
They're like the whales in the ocean?
Right. Understanding how they operate can be really helpful.
She compares them to a wolf pack, remember?
Oh, yeah, that's a great analogy. They move together in sync.
So if we can learn to spot their tracks,
We can anticipate their moves and maybe even profit from them.
it's like learning the secret language of the market.
Exactly.
So Wendy gives us some clues on how to do that, right?
Yeah, she talks about looking for those sudden spikes in volume, unusual price movements.
And keeping an eye on the accumulation distribution line, like we talked about before.
Right, all those subtle hints that can tell us what the tooths are up to.
This is really fascinating stuff. You know, her book really makes options trading seem less intimidating.
It is. It's not just for Wall Street gurus. Anyone can learn it.
And her own story proves that, right? She started small and built her way up.
Yeah, step by step, with careful planning and lots of learning along the way.
So any final words of wisdom for our listeners who are ready to dive into options trading themselves?
Definitely. First, do your research. Wendy's book is a great foundation, but keep learning, follow other traders, stay up to date.
The market is always changing, so you got to keep learning.
Second, trust your gut. As you gain experience, you'll develop a feel for what works for you.
But don't be reckless.
Oh, of course not. Always manage your risk. Don't bet more than you can afford to lose.
And keep learning. Always be open to new ideas and strategies.
Exactly. Embrace the challenge. It's a journey, and it can be incredibly rewarding.
So that did for our deep dive into Wendy Kirkland's option trading in your spare time.
Hope you enjoyed the ride.
Now go out there and start practicing. Happy trading, everyone.